Hello everyone. October is known for surprises, but this has been quite a year of uncertainty, and Friday's revelation that the President tested positive for COVID-19 is merely the latest in a long list of firsts over the course of 2020. During this video, I'm going to update you on the third quarter and give you my outlook for the economy and for the equity markets. But first, a word on the news from Friday of the President and First Lady's COVID-19 diagnosis, which also included other confirmed cases of political leaders and staffers. Given the fluid nature of the President's health situation at this time, it's difficult to know how this might change the upcoming debates, campaign schedule, and possibly the election day itself. Though back at the White House right now, the President won't be able to resume a full schedule yet, but as I said, the news is quite fluid. Some senators have tested positive for the virus, and this is important if some become ill, because we're just about to start the debate in the Senate on the nomination of Amy Coney Barrett to the Supreme Court, and that could also be impacted. I'd like to move over to the economy. The second quarter of 2020 was the worst in a generation, as I've talked to you before on, with almost a negative 31% gross domestic product print. But the third quarter is going to be actually the strongest in a generation. We will likely see a GDP report in the range of around 30% or possibly higher just prior to the election. This is the result of the CARES Act enacted by Congress, zero interest rates by the Federal Reserve, and innovative bond buying programs to ensure companies have access to much needed capital. An additional stimulus plan of over $2 trillion is being negotiated right now between Speaker Pelosi and Secretary Mnuchin. There are broad philosophical differences, as the Speaker wants a broad bath of money to flow into states for other Democrat priorities, while Republicans want a smaller, more targeted stimulus plan. Both sides agree that something has to be done because the virus just continues to linger on. Switching over for the stock market, the strong liquidity and surprisingly strong revenue and earnings really kept stocks moving higher during the course of the third quarter. The NASDAQ, led by technology shares, was the clear leader and did extraordinarily strong. The S&P 500 was also solidly positive, but the largest cap stocks masked perhaps broader weakness in that index. The interesting thing is the small cap stocks, as represented by the Russell 2000. I've called the Russell 2000 the reopening benchmark due to its correlation to positive developments in fighting the COVID-19 pandemic. But it continues to lag, even though the underperformance that had really was at its widest earlier in the year has begun to narrow a bit. While technology and healthcare continues to be the leadership sectors, August and September saw some interesting action. The more economically sensitive stocks that had been underperformers until that period of time really started to play catch up. So we were seeing really strong really strong moves in industrials, consumer discretionary stocks, in particular in those subsectors like retailers, gaming, and restaurants. Banks are very interesting because they've really done poorly this year, but recently have really started to accelerate. So we're now about 4 weeks away from the election, and the outcome still is difficult to predict, though the President is quite far behind the challenger. The policies of the President and his challenger are very different, and the outcome of the election will dictate which policies prevail. Also, it's important to note that the composition of Congress and the Supreme Court could also influence where we see the best investment opportunities. I do think, though, this gradual broadening out of the stock market is telling us something very important. It's a little bit of a move away from the very popular bellwether stocks. And I think it's a very important sign that the U.S. and economies around the world are improving, and that growth is beginning to reaccelerate as we put this horrible virus behind us. That's also coinciding with a weakening U.S. dollar. And that's, again, not saying anything bad about anything going on in the United States. It's really saying that economies around the globe are beginning to show signs of growth. While virus cases are rising, we are closer, perhaps more than ever, to a vaccine, and we have more tools to deal with the effects of COVID-19 than we had before. The next 4 weeks are going to be chaotic, with politics dominating the news cycle. But as we get through that period and continue through the fourth quarter, I believe that stocks will continue to rise as this gradual acknowledgement that this will end at some point, and there will continue to be a rebound in corporate profits. Corporate profits at the end of the day are what drive stocks higher. There's a lot of crowding in stocks, technology bellwethers that perhaps have gotten to more stretched valuations. We can find a lot of interesting companies in a lot of different sectors away from that that we think positions us well as we move into 2021 and beyond. Thank you very much for your time today, and if you have any questions, feel free to reach out to me. Thank you.
The information contained in this webcast reflects the views of Palisade Capital Management, LLC, as of the date of its original broadcast, and such views are subject to change without notice at any time. All information provided in this webcast is for informational purposes only and should not be considered investment advice or recommendation to purchase or sell any specific security. While the information presented herein, including information obtained from third parties, is believed to be reliable, no warranty is made concerning the accuracy of such information. There can be no guarantee that any forecast discussed in this webcast will be realized. Consult your financial advisor before making any financial planning or investment decisions. Past performance is not a guarantee of future results.